Okay, folks, excuse me. Welcome to Thursday Night Stock Charts Live. Let's kick it off with Nike. They reported earnings after hours. I forgot they were reporting. And they are moving up dramatically. What was the anticipated market maker move? Excuse me. $5 move. Closed at 89.63. We're well outside the market maker move here. So they must have had a really good report. Looks like I'm not going to go through all of this. Q1 earnings spotlight, EPS beat as North American sales slide, shares move higher. This is one where I maybe look to sell a call spread tomorrow morning and take the opposite side of this trade. Nike's been a dog of a stock of late. Weak stocks tend to get weaker, and that forward-looking guidance does not look great. I'll do a little bit more research before we put that trade on. But Nike, again, after hours, up measurably, about twice the anticipated market maker move. Futures action, we're up measurably after hours. VIX coming in. Let's say hello to folks here. Jody, Franklin, RB, happy Thursday, Bob. Can you please cover SPY and Apple from the short side? Thank you. You got it. It's funny. I just closed out an article. I put up a lot of articles and stuff to go over, and I canceled some stuff out. One that had to do with Apple. I closed out. I wasn't going to go over it, but now I'll probably bring it back up again. What else? I got to go to the members area. Trader Isaac, hello. I just realized I had this. Let's see what happens here. Music AI. I know you guys can't see what I'm looking at here. It doesn't play. It's like a music library, but I press play. It doesn't do anything. All right, forget it. Enough of that. It's 20 seconds of my life I'm not getting back. Okay. Let's go to the members area. I just want to make sure that members didn't update anything after hours. Go over their symbols. We never want to forget them. And then we'll get started. Let people funnel in here. I'll let people watch Nike's price action. Wow, look at that move. Oh, I can't wait to short that. Okay, members area. All right, AXP for Andrew. Thank God I looked. Okay, good. All right, let's get to it. Okay. What's that? You can hear that? I can't hear it on my end. Why can't I hear that? Maybe I need headphones. Why can't I hear that? Was it good? I can't hear it. All right, cool. At least it worked. Okay. Oh, you know what I probably need? I'm going to stop sharing for a moment. I think I figured it out. Hold on. Share again. Share system audio. Let's try that again. Yeah, I can't hear it. I thought there was a setting I could work with, and no, it doesn't work for me. All right, let's get to it, folks. Before we move on, TrendSpider, they are having a this is bananas, 70% off sale. Link down below. Take advantage of it. Automated technical analysis. We'll be going over the software in a little while. All right, economic data that came out so far this week. Pretty much as expected. Case-Shiller came in lower than expected. Consumer confidence lower than expected. The one big surprise is durable goods came out with a beat, yet equities shrugged it off. Today, initial jobless claims came in less worse than what was expected. Good news was good news today for equities, and GDP came in. It came in about par. We're going to talk about this a bit more in a little while because Bidenomics at work here. There's a little bit of shenanigans going on in this number. I think this number is significantly lower. Tomorrow, we get the PCE index. It's the Federal Reserve's favorite inflation index. Keep an eye on it. Also, keep an eye on inventories. This will tell you whether or not retailers need to mark down in advance of the holidays. Are they building in advance of the holidays? Or is this just going to be a typical yawner of a report? I'm curious about this. And then we're going to get a 10 a.m. tomorrow, consumer sentiment. Now, as of right now, the markets are pricing in a November pause, no rate hike. And as far as it goes in December, we were at no pause probability of that happening, 57.9. That is now 64.8. So the probabilities continue to rise. That despite what Fed Chair Powell had to say, he said one more rate hike this year. The markets aren't betting that, and he does what the markets tell him to do. So if they say no rate hike, there's no rate hike. Now, if that inflation number comes out hot tomorrow, look out below. Taking a look at valuations, it feels to me like like we've been through a meat grinder of such, and we kind of have been back and forth gyrating, and we're still at nearly 30 on a multiple on the S&P 500. Bananas, it's crazy, but we are there. Really no change in the past couple of days. We are very, very expensive. The second highest level since just at COVID. The Federal Reserve's balance sheet fell this week by about 20 billion, a little bit more than that, 22 billion to be exact. And we're at the precipice of breaking below 7 trillion. And this is the proximate reason why you're seeing yields move up higher. They're not buying. The Saudis aren't buying. The Chinese aren't buying. The Japanese aren't buying. It's the market that is buying, and they want higher yields. We're going to go to yields in a moment. Now, going to the GDP number that came out today, the number is usually a yawner, not much to expect. And there really wasn't much out of the number until you drill down into personal consumption. Personal consumption had a 9 sigma miss to expectations. It doesn't happen, but this is what you call Bidenomics. They even have it here. The first time I saw it, I was like, that's BS. And sure enough, BEA, the B usually stands for Bureau, but in this case, it'll stand for Biden's. And it looks as though they're painting the tape on the GDP number. And that could be right. We got a reason. The market gets it. Wink, nod. Looking the other way at the federal government, probably putting out some false data. And we could expect some additional pressure on GDP moving forward as you get the federal government shutting down. Bravo. Shut that sucker down. UAW strike, that's broadening out, and the resumption of student loan payments. As for, we get this every week, the bank's demand for Fed's emergency fund remain near record highs as retail money market fund inflows continue. They're leaving the regional banks still, and the regional banks are going over to the Federal Reserve saying, please, please, a handout, please. That's exactly what they're doing. And the Federal Reserve is doing it. They're bailing out the so-called depositors. They're bailing out the banks. Now, I thought this was very, very interesting. And the operative word here, this is not just the S&P 500. This is the S&P 500 equal weighted. So take your Magnificent Seven stocks, your Apples, not that the Apple is a great stock to own right now, Tesla, Microsoft, etc. Those names there, which have really led the charge higher by and large for the market on the year, you balance them out to an equal weighting across the S&P 500. As of today, we are flat on the year. No net change. And adjusted for inflation, the small caps are negative on the year. Crude oil prices just briefly crossed above $95 for the first time since August of 22. However, this 95 level is even more significant as it was where the U.S. last emptied the majority of its oil reserves. The last time around, U.S. reserves are nearly 250 barrels, a typo there, barrels emptier, their lowest since 1983. Therefore, refilling reserves now would be more expensive than what we sold them for a year ago. This is Bidenomics, and this is really a security threat to the United States. Whether it be a disaster, weather, or war, this is an absolute catastrophe, and they're going to continue to drop it. The problem is that there's just not enough left to really make all that much of a difference without just purely emptying it outright. National debt. Here's a graph of the national debt. And just to put what we're looking at in context here, the national debt in red, GDP in blue. Not that this is anything new, but it's just a great graphic of how the debt has been, since 2013, has been outpacing GDP by a very, very wide margin. And this is unsustainable. This is not going to last. And I fear the day that it ends. Can they keep it going? I'm sure that they can, until they can't. Now, I meant to segue from the oil reserves. I was out of sequence here. My apologies. Oil reserves into oil. Oil had a major, major breakout yesterday. Reversed today, but on the week, we are still up on the week. And this is inflation. Pure and simple inflation. Now, gasoline prices had pulled back, and they're breaking down, which is a good thing for the consumer. Good stuff there. Now, going into the next series of charts, we've made some adjustments today. So, actually, it began earlier in the week. We went into the week net short the market. This morning, as we reversed and began to rally, we took our long puts off the table. We booked profits on that trade, and we exited, raised capital. We did add back short more Tesla puts. Why? I'll go into that in a moment. And we are still short of Meta. I keep wanting to say Facebook. I'm trying to train myself to say Meta, but I keep wanting to say Facebook, and I go blank. So we have a short position vis-a-vis naked calls and a call spread. The call spread in our small account, the naked calls in our large account, and I'm fearing a continuation breakout. We're probably going to have to get long of Meta and create a covered spread, like a covered call scenario for that trade, because what you have there is what you call a TTM squeeze setting up. Let's bring it up. And it began in earnest today. The 300 on Meta has acted as a magnet. You can see that this morning you had the red dots firing, you had a reversal bar, and they rallied. I didn't think that they were going to rally it. I thought that they may take it down because we gapped down. And so I tried to short it, didn't work. We just got out quickly. And the shares rallied and closed off their highs, but these shares are probably going to continue higher. Daily chart. Now, this squeeze is looking really, really good. So tomorrow morning, if we don't gap down, I'm probably going to need to get long of Meta again via a credit spread. That's to protect our short position, which is a naked call, and a credit spread, which has great time decay. But I'm fearing a big move up here, so we got to protect ourselves in the meantime. Yeah, definitely. Okay. So the dollar influenced us this week. I was talking about the dollar, that we were nearing the upper band of resistance on a weekly time frame, and on a daily time frame. Let's go to the UUP. It's the UUP. Let's go. Here we go. You can see that we were pretty overbought on the US dollar. Doesn't mean it can't get more overbought, but on a weekly time frame, we hit that upper band of resistance. Usually you get a retrace. On a daily time frame, we were extended. We got the pullback. So what did we do? We started buying back NUGT, gold mining stock, nibbled. Not a very aggressive bet. In fact, I hedged. I sold covered calls right away. So we are beginning to nibble on the gold mining stocks due to the fact that the dollar appears to be, at least in the short term, petering out. We've had, going back to that weekly chart, this must be a record, as far back as I can remember anyway, 11 straight weeks. Actually, no. This hasn't been 11 straight weeks. We had 3 weeks ago we were down. I think the UUP shows us as 11 straight weeks. Yeah. So the dollar bull ETF shows 11 straight weeks of, we may have been flat that other week, of upside move, which is really unheard of. And frankly, unsustainable, which is why we want to take advantage of it and begin buying when nobody wants the shares of gold mining stocks. And in fact, when you take a look at the 10-year yield, the 10 yield is tapping the upper band of weekly resistance. And on the day today, bearish key reversal. And what were we doing earlier in the week? We began nibbling on the TLT. I usually have these ready, my apologies. Here, forget it. Which on a daily time frame was just clobbered, absolutely clobbered. They dropped it this morning. We got that bullish key reversal, which is what we always love to see. And we began buying more aggressively today, and we plan on adding more. So, equities rallied today, and I still maintain a short position in a few names and on the triple Q. So the question is why? Why, if yields are pulling back, why, if the dollar is pulling back, why wouldn't I be more excited about the overall market? The question is, why are yields pulling back? Is it a technical condition? Is it just simply overbought, or meaning bonds oversold? Maybe, could quite possibly be. But there are other reasons out there. We already went over a couple of them. One of them being oil prices, which is a major tax on the economy. And it's certainly not going to help that PCE number tomorrow, especially when it gets reported next month. Because the oil data, and yes, I know they back out food and energy out of PCE and CPI. It still filters its way through to the core in manufacturing. Don't forget, I always use this analogy. If you're a tire manufacturer, tires are included in the core number. However, it takes oil to make a tire. So it filters through the system. The distillates hit the manufacturing process, driving up costs. So oil's been on a rally for quite a while now. So I'm suspecting that PCE number is going to come in pretty hot tomorrow. Live cattle, very hot. All-time highs. Frozen concentrated orange juice, very high. A lot of ag names have pulled back this week. So food prices will come down a bit, but they don't filter into the core number. Not as much anyway. So why else are we somewhat bearish? Well, a couple of reasons. I was going to skip to this, but no, let's keep it in sequence of how I set this up. Remember that bonds are a safe haven, as is the dollar, but not always. Bonds are always a safe haven. So if equities drop, bonds go up. So you got to ask yourself, were traders looking for an opportunity to exit stocks and move into the bond market as a safe haven? Maybe this could be the beginning of something. This is a major reversal. Stokes moving up. This is going to go up higher. So how is the health of the overall market? We already spoke about this. S&P 500 equal weight flat on the year. Adjusted for inflation, it's negative. So let's come back to this. This is a ratio chart. S&P 500 versus the 10-year yield. The S&P 500 has been lagging the 10-year yield ever since 2020, and it's getting weaker while yields get stronger. So this is a reason why I am very, very concerned. You've never seen this before. You've never seen oil rally like this. You've never seen yields rally like this. You've never seen the dollar rally like this. And the equity markets, with all of our debt, hold up like this. It's really astonishing. Is there a reason for it that I'm not getting? We got to keep an open mind. Maybe there is. Maybe there is. But to have your PE ratio at near 30 and you have bond yields rallying and on a relative basis, equities underperforming, what is keeping this market up? I don't know. Now, you do have earnings coming up. I didn't do this versus QQQ. It should be interesting. Now, the Qs are succumbing. You can see the Qs are now rolling over. They were outperforming for most of the year. Now they're succumbing to the pressures of having high yields. And we remain short. We don't have the puts anymore, but we remain short using the SQQQ. Now, another reason is that when you go back to, I've gone over this with members over the past couple of nights this week on Market Wrap, and this is really quite alarming. So what this chart is, this is a chart of the NASDAQ composite during the crash of 1987. And overlaid here in black, you have the 10-year yield. And you could see that as the 10-year yield began to rally up and through the performance of the NASDAQ composite and went parabolic, the equity markets, the floor just fell out from underneath. So then you take a look at, okay, so that was 1987. What's your point? My point is this. Remember this. We'll toggle back and forth. Let's make this a open, high, low, close for consistency. So here we are yet again, and up until today, this chart has been in lockstep with 1987. Today, I think that what we're seeing is perhaps the beginning of a bull flag setup, which will probably get resolved to the downside. And what I'm expecting here is momentum as it did in 2007. To roll over. Now, this strategy is a strategy that is not based on a lot of confidence that I have in edge. It's just an observation. Maybe it works out, maybe it doesn't. But I think it's quite eerie. The similarities here, again, 1987. Here was the, let's annotate this. Double top, support level broke, and it was off to the races to the downside. Fast forward to present day. Double top. Support below. Folks, we're below. We're below this breakdown point on the Qs. So that's the basis for the short. And what I'll add to that is that when you take a look at when you take a look at the weekly chart, I think I overrode that other chart. God damn it. NASDAQ composite on a weekly time frame. Momentum is going in the wrong direction. And I bet it looked the same way back in 1987. So the other reason that we're concerned is the yield curve. And we've gone over this time immemorial. One trading day left to go. But the difference between where we are today relative to the last time we met, which was on Sunday, is we are significantly higher than where we closed out last week. And in fact, we have a major breakout. And if we close out the week where we're at or higher, that would put in a new higher high relative to the highs seen back in May of this year. The yield curve is steepening and the equity markets are shrugging it off. Or perhaps they're not shrugging it off, They're beginning to weaken up, and we had a couple of back-to-back short covering rallies because we got oversold. So, is it time to go in and let's go to comments here. I'm seeing them backing up here. Is that background music still running? Hopefully not. Let me know, please. He's going to... Oh, yeah. No doubt. No doubt. Please tell me that's off. Please. No, I was playing around with it. I couldn't even hear it on my end. Oh, no. It's still playing? Oh, I'm sorry. I'm really, really sorry. I'm wondering why the viewer count just dropped like a rock. I'm so sorry. I stopped it. Oh, my God. All right. Wasn't the NASDAQ different back in 1980s? I thought the NASDAQ then was for smaller cap companies that didn't meet the requirements of the New York Stock Exchange. Maybe I'm wrong. No, you're right. You're right. I mean, that's when I started. The NASDAQ was, it was like the pink sheets. But you can't argue the correlation. I'm just going by the correlation. So it's eerie. It's very, very eerie. Sorry about that. Sorry. All right. So is it time to buy gold? No. Even though I stepped in, I bought the miners today. And in a way, I'm kind of regretting it. I'm looking at gold today, and gold is really breaking down and breaking down hard. Let's see if this is updated for today. It is updated for today. Wow. Real big breakdown here. We're going lower unless we get a magnificent rally tomorrow. And we bought Nugget today for a rally. But I don't think I'm going to be staying in this one long, because if gold continues down lower, and I'm right, and equities begin to break down, then gold stocks are going to go down as well. So we're going to keep probably a stop right underneath the day's lows. If they break that low, we'll exit stage right and preserve capital. Wait for the next bus stop. All right, so Tesla. One of the reasons why I shorted Tesla is that they have a report coming out on Tuesday or Monday, actually, about their production. It doesn't look good. So it's kind of a play on the fact that I think that Tesla is weakening up here, and that the seasonality for Tesla going into, this is TrendSpider, folks. Again, 70% off. I think that's cheaper than what I get. Seasonality for this week is negative, and we're down over 4% right now, despite the update today. And next week is very negative. These are the two weakest, months, not weeks, months, the two weakest months of the year. So that's the other reason why we're short of Tesla. We have a catalyst. We have a weak stock that appears to be getting weaker, despite today's bullish reversal bar. And I'm not in love with the short. So if it doesn't respond quickly tomorrow to the downside, or if it just trades sideways, we're going to exit stage right quickly going into next week after that report if it goes against us. Okay, so Tesla short over in a month. If you're using seasonality alone, yes. But even if you use seasonality, I mean, you take a look at November, about 30% of the times over the past 13 years, it's down. So if we get a big sell-off in the equity markets, well, that's not a guarantee. No, nothing's a guarantee. So, but it looks good from a seasonality perspective that the month of October is going to be negative for Tesla shares. And this is that report. They're expecting Tesla deliveries loom. Wall Street readies for a miss with record numbers. They have a typo here too. No longer on the table. Typo. Bob, do you like oil, gas, transportation, pipeline stocks? We'll go over them. I like the XLE. I mean, they really broke out. I didn't take a look at how they traded today. I'm sure they were down along with oil. I have those symbols for you, trader. You are welcome, Jody. Okay, so let's spend a few moments, and then we'll go into watch stocks for you folks. Let's take a look at how we're closing out the week. We already went over bonds and the yield curve. I'm not going to spend too much time here. The one thing I will say about the yield curve, and the month is over tomorrow, and this is the yield curve steepening. This is no joke, folks. So be careful here. We are flirting with the highs of, I think it's May, or is it March? March. So buckle up. We're not that far away from those highs. And if we take out those highs, not good. Not good. Historically, the steepening yield curve is very negative for equity markets. So buckle up. And it's not even just the monthly chart, it's the quarterly chart as well. This is a monster. Yields we went over. TLT we went over. This is a better chart than what I use, though. Daily view. I don't have my lines drawn here. But you can see how oversold we got relative to the 2 and 3 standard deviation Bollinger Bands. So it made sense to begin adding more today to the position. Tips. On the verge of recapturing support. This is a bullish sign for gold mining stocks and gold. I'm very surprised to see that gold was down as much as it was today. Daily chart of tips, because it was a beautiful chart. Very much like the TLT, the 20-year bond ETF. And for those folks not familiar with this candlestick, it's a bullish key reversal, also known as an outside reversal bar, also known as a bullish engulfing. You're not familiar? 5-part video tutorial, my top 5 favorite candlesticks, free below. Take advantage of it. We did the dollar. We'll skip that. I want to talk a bit about the euro. Off the lows of the week on the day, a very strong day. Big gap up. The question is, does this hold? We'll see how we close out the week. Yen, weekly view, down a half percentage point. This is going to rally soon. Daily chart. I mean, this apex, in fact, let's go take a look at the yen. Yeah. It's actually starting to squeeze to the downside. Let's see if anything's happening intraday. Yeah, this may fail. It's limping up. All right. I was thinking that this may break out. If it does break out, then it's a buy. If it doesn't, avoid. Volatility, weekly chart. Just barely up on the week. Just barely. A big fade off the highs. Tomorrow's a big day. That PCE number is coming out. Very, very important number. Daily chart. We broke back down below support. A lot of good opportunities out there in the options selling arena. So we'll probably be doing some selling tomorrow I'm thinking maybe even rotating out of Meta and into something else. Why fight it? Thinking about it. Dow Jones Industrial Average weekly chart down over 0.75%. S&P 500 still down on the week by just shy of 0.5%. Let's check out the daily view here. An up day, but I think this is a dead cat bounce. I think we roll over. Good volume though. But my gut is telling me we roll over. Qs now up on the week. Daily view. Again, I think we roll over. That 360 mark is pretty significant resistance. Now, if they take out the lows tomorrow of the week, look out below for the market. The banks down week by about a 0.5 percentage point. I got an alert. JP Morgan fired off a big overbought signal intraday. So it looks like we had a bit of a short squeeze. Let's go to JPM intraday, see how that closed out. First, take a look at the daily chart. Strong day, but I think they squeezed the shorts here. Yeah, look at how overbought this got, and they faded it off the highs. Technology. Weekly view. Very weak. Stokes trading down below 50. Rallies tend to fade. Daily view. An up day. Will we break out? That's the question. Semis. Up week. Do we recapture support? That's the question. Daily view. All of these, every single chart here in the equity sector got stopped at resistance today. LABU weekly chart. Now up on the week. We own this, a little bit of it. Could be a dead cat bounce, not ready to go adding more yet. Staples. Down below support, weekly time frame, daily view. Inside bar. Probably going to rally here on Staples. If we don't, very bearish event. Discretionary names. Broke support last week, holding that breakdown this week, daily view. Stokes threatening a rollover here. But to be fair, we broke out of this downtrend, but it was unsustainable, the downtrend. So no great shock. Emerging markets down on the week. Strong dollar, weak emerging markets. Daily view, they probably popped. They did. I still wouldn't buy them. Not yet. The dollar's not done yet. Energy. Wow, what an interesting chart. We broke down last week on energy, and that current, with one trading day left to go, we're back above that support level. Rarely does that succeed. It happens. We'll see how we close. Energy, they were up today in the face of a reversal on the price of oil. Very, very impressive. Let's see how they behave tomorrow after the PCE and consumer sentiment. Oil, we already went over. We don't want to waste too much time there. Gasoline, we went over. Nat gas, now up on the week. Son of a gun. Daily view. I think I'd just rather sell premium here. Gold, we went over. I didn't go over the daily chart of gold. incredibly weak, but really entering a very attractive buy area. The one thing I will say, 50-day is going to cross down below the 200-day. Accident act of God. That is not good. And here's our NUGT. I worry about ending prematurely here. All right, we're all here. We're going to stay small on NUGT. All right, I think that's it. Let's go to chart requests and Falcon. Hey, Falcon, where you been? Chewy, I'm in on at 1775K shares. You're going in there big, huh? Okay, let's take a look. Again, folks, we're going to be using TrendSpider, 70% off this week. I give it away free to our silver and gold level members. If you're not ready, that's fine. 70% off. Use the link below. Take advantage of it, man. And you get 7 days free, too. All right, let's get to it. Okay. You got it. PLTR ARM. Okay, let's do it. SPY. Is it time to short? Short volume is rising. It broke out today. So it's difficult for me to say, go ahead and short it. Well, I covered my Q short today. Would I initiate a new position here? Probably not. The risk of a continuation move up higher to resistance is too risky. Now, if we break down below 425 and close there, then I would be a short of the S&P 500 in a very, very big way. So right now, technically, we're holding support. We had a breakout today, so no, I can't condone shorting the S&P 500, especially when I took my puts off on the Qs today. AAPL. Now, Apple is a laggard. It's lagging the Qs. Weekly chart. I think that this is a better probability short than the S&P 500. There was an article that came out earlier, which I closed out. Basically, it's about the iPhone, the new iPhone that came out, and it's overheating. Here you go. iPhone 15 sales threatened by phones overheating up to 122 degrees. I don't like anything that's got exposure to China, to be honest with you. Apple has a tremendous amount of exposure to China, as does Tesla. So that's another reason why I shorted Tesla. I just don't like their exposure to China. Apple, frankly, China's hurting them. So because they're limiting who can use Apple phones. So would I short Apple here? We broke down this week. I think what's going to happen is that they're going to rally this back up to 174, and it'll probably fail. I'd be shorting at 174. We bounced off of support today. Again, I think they rally it and it fades. So I would short it at 174. I would add more to that short on a breakdown to new weekly lower lows. That's the trade on Apple. AXP, American Express. Short interest, short volume rising here. This is a short. They may rally to try to recapture next week, but American Express is breaking down. I would short it on a rally up to 153 per share, give or take a dime. Daily view. I mean, it broke through a whole bunch. I didn't mean to do that. It broke down through a whole bunch of support. All these lines here, all this spaghetti, that's support. It broke through it. This is a short. American Express is going lower. STNG. Scorpio's tankers. Now, when these things move, they move. You're in ascending wedge formation on a weekly chart. RSI looks really good. Higher lows, higher highs. I wouldn't be a buyer here. You have a lot of congestion up here. And you can see with the topping tail on top of this candlestick that sellers are moving in and they're taking it off the highs of the week, daily view. Again, an ascending wedge formation. Not much to do here. It's got to break through all that congestion immediately above. But if we close above 55.25, I would be revisiting the long side because it probably goes higher from there. What's the premium here? No, nothing there. So it's a hold. I would initiate a new trade here. FRO. Monthly chart looks awesome. Weekly chart looks awesome. If you get a pullback next week, I'd be a buyer on a retest of 1837, give or take a dime. That assumes that we hold this breakout. Daily view. Beautiful day today. But we do have resistance immediately above. Wait a minute. Okay, that makes sense. So we do have another resistance level, daily time frame, immediately above. I'd be a buyer on a close above 1873. And next week, if we get a retest back down to 1837, I would add more to the position. And then I would add more on a new weekly higher high more aggressively. Chewy. All right, so this is one of our extreme oversold stocks. It's been holding that support level that we talked about on our last live stream, Daily View. Let's do this. Average 3-month daily volume is 5.7 million shares per day. You have shorts. Oh, this is nice. Shares held short, 16.82 million. That is a multi-day short squeeze. Where do I think we're going? 20 bucks a share. If you have 5,000 shares at 1770, I would take that home run in a heartbeat at 20 bucks a share. Good luck on that trade. PLTR. Looking good. Nice reversal bar off of support. You do have resistance above, though. Rising upper band of resistance. Daily view. Yeah, you got resistance here. If you're able to close above 1580 per share, I would start nibbling, but I would just remember that weekly chart. You have a rising upper band of resistance. So you're in a trading range right now, but it looks as though it's probably going to move up higher. It's just going to take a little while to get a little bit of, like, gain some traction. And I think the shares do move up higher. ARM. You're welcome, talking. This is not one I could really do any analysis on. There's nothing to analyze. I don't. Buckle up. It's the only thing I could say. It looks like it wants to go up higher somehow or other. It has a whole bunch of volume shelves up here. Not a lot of history. Not for me per se, but that's just me. So I can't analyze it. I don't want to give you BS. All right. So, folks, thanks for being here. Like, subscribe. I really apologize for that music early on. I got to listen to the replay and see how bad that was. And everybody have an awesome, profitable Friday and a great weekend. I'll talk to you soon. Be well.